Good afternoon, everyone. This is Mike Mentor with your Market in Minutes report. And of course, we are looking back on last week, March 11th through the 15th. And it was a down week, but not terribly down. So let's dig into the details of that a little bit. Let's take a look at the 5-day performance here. We have the Dow Jones just about flat, S&P down just a little bit, and small caps, as you can see, got hit pretty hard. Did have some interest rate increases last week, which were the reason behind that. And we'll talk a little bit more about that as we get into it. NASDAQ down just a little bit, and foreign stocks represented by the EFA having a rough week. But still overall for the year, looking pretty solid. Small caps even hanging on to their gain here in light of even pretty stout losses last week, but still overall looking very good. Again, it's still the same story, this interest rate story, inflation. Will the Fed decrease rates, which I still believe they will, and we'll get more clarification on that this week. And that'll be part of the storyline as we get into the details here. So rates across the board, as I mentioned, did increase last week. Nothing too dramatic, but you can see they did go up just across the board, really. So your 30-year is now at 4.45, 10-year at 4.33, the 2-year at 4.74, and mortgages at 7.19. Interestingly, the 30-year mortgage actually ticked down a bit last week. Now, this is a little bit of a lagging rate, so it will most likely tick back up as the week progresses into next week. So we'll keep an eye on that. But in terms of the story here, stocks did slide. So again, it wasn't terrible by any means, but they did slide. Tuesday was the only bright spot during the week as stock prices rose after the Labor Department report showed the consumer price index rose 3.2% in February compared with a year earlier. It was a bit warmer than economists expected, but cooler than investors feared. The news sparked day-long rally with the S&P 500 stock index setting its 17th record high of the year. And following Tuesday, caution lingered as investors parsed the underlying data behind headline consumer inflation numbers. So Thursday's fresh PPI, so that's the producer price index report, showed that wholesale prices increased by 0.6 in February, more than expected, 0.3% increase. So this was part of the reason that the market kind of hit the brakes last week, a little bit warmer than we anticipated. Additionally, core PPI, so this is excluding food and energy, was hotter than expected. So all in all, wasn't exactly what the Fed wanted to hear. Retail sales also reported on Thursday were disappointing, rising less than expected and adding to the inflation angst. So this rattled investors and contributed to stocks closing lower for 3 consecutive days to end the week. So let's get this conversation broadened out a bit here. This speaks to kind of this broadening leadership as we talked about, expanding the breadth of the market rally, which is a good thing. But unlike the prior week when the S&P fell the least, last week it lost slightly more than the Dow, but less than the NASDAQ. So that performance pattern suggests market leadership may be broadening out a bit beyond just we hear the Magnificent Seven talk all the time, the big tech companies. It may be broadening out past that, and that's exactly what we need. So a little painful sometimes getting there, but that's exactly what we need. So also, energy, financials, and materials sectors all posted gains last week, showing that the other groups may join the tech-led rally. So that's good. FOMC meets this week, and that is a big one. So we should have comments this Wednesday from Fed Chair Jerome Powell. Almost zero chance of a rate cut. That's not going to happen in March anyway, but hopefully we'll get some guidance for June. So we're kind of still holding out hope that we might get these rate cuts in June. So fingers crossed on that. This will be a big week. All eyes and ears will be on Jerome Powell on Wednesday. So what's on deck this week? So key economic data, some big ones here, obviously. So housing market index on Monday. Tuesday, FOMC meeting begins. It doesn't end until latter part of Wednesday. But housing starts and permits, and then 20-year Treasury bond auction. So that's a big one too. Be keeping some eyes on that. Wednesday is the announcement. So FOMC announcement and then Fed chair press conference. That will be a big one. And also the EIA petroleum status report. Thursday, jobless claims, existing home sales, and Fed balance sheet. And then companies reporting earnings. Tuesday, GameStop, good old GameStop. You remember the Wall Street bets craziness a while back. Wednesday, Micron Technology, General Mills, Five Below, and Chewy. Thursday, Nike, FedEx, Lululemon, and Darden Restaurants. So that will round out the economic data and companies reporting earnings. And so that is going to conclude the report for today, guys. Appreciate you tuning in. And as always, here is our contact information. Should you need to get in touch with us for any reason, we'd love to hear from you. And hit that subscribe button below. We'd love to have you get all of our videos as they are produced. So we would love to have you as a subscriber. Thanks, guys. We will report back to you next week on what occurs this week. Have a good one.